The simplest thing that you can remember is that when there is huge price action, definitely check the shorts to see because typically they're going to be on opposite ends of the spectrum. Welcome back, YouTube. So in today's video, we're going to talk about shorts again and this price movement that we're seeing here. Shorts are down and prices are up. It's often debated that what is the level of influence that shorts have on price action. And we typically on this channel will kind of break over and say, hey, we got to break down. Here is how aggressive the shorts have been today, which are these pretty much these artificial sell orders. And today we have double digit relief or pretty much those exiting these sell positions. And we see that this is affecting the price. And specifically in Dogecoin here, we're looking at Bitcoin here on Bookmap, and we see the pools of liquidity are still giving a wide range of space around the equilibrium of price. But you'll see that when you're exiting these short positions, because it's happening in Bitcoin as well. We're going to take a look here at the short chart momentarily. But you'll see when you're exiting these positions, that's typically when you buy back in, or that's that guaranteed buyer that you are when you take the short position. So you're going to see a lot of these green candles or these green buys. And that's going to be those big green circles that you see there. So you'll see that even though the coin is not necessarily inside of a pool of liquidity, which are those buy and sell orders that if you hit a certain price, those limit orders and stuff like that, but you'll still see how it's producing these large green buys. This is people pretty much covering or exiting these short positions. When you short something, you're a guaranteed buyer at some point. You can close out that position, and that's typically when you buy back into the asset or you return the borrowed share. So it's not uncommon that you're going to see a lot of these really big buy orders that even though the coin is not necessarily trading inside of a strong pool of liquidity. And just so you know, I do have a link for Bookmap in the description because a lot of people ask, like, first off, people ask me, what is this and stuff like that. So this is pretty much you can track the pools of liquidity. And I have a link in the description if you want to have access to this. So let's take a look at the charts here for the short positions and the percentages that they've came out. This is Dogecoin here. Pretty much right now, it's actually increased. It's around 17.52%. Dogecoin shorts are now back down roughly around the 21-day moving average. So this is pretty much a really decent candle downward when it comes down to the actual short positions here. And typically when you have people exiting that amount of shorts, you're buying back into it, relieving that selling pressure. So you have the coin that's kind of going to float up to its more natural price because those fake sells have been removed. Let's take a look here at Bitcoin as well, because I want to show you that this is happening across the board. We see that Bitcoin shorts are down roughly 10.40%. And obviously with the price gaps and stuff like that, you're going to need much more effort, obviously on Bitcoin side to get like a huge percentage jump or price jump like you would see in something like Dogecoin. But this is just an indicator that people are coming out of those short positions, at least for now. And you have to ask yourself the question, okay, well, why is that? Is this just a coincidence? Are we set for a bull run this week? And even though I'm still not convinced long-term because of our macros, this is something similar that you do with price action when you are pretty much literally trying to get that additional capital into certain position. You have to kind of create that pressure to say that, okay, well, this thing can take off at any moment. And this is where you're going to get those people that are kind of on the edge between should I buy now or is there going to be better entries later? And this is kind of how you push them over the edge and get them to kind of take action. Remember, we've had hedge fund managers and stuff like that come out publicly and say that they hire psychologists to influence consumer actions. So when you see things like this, remember that the macros and all that kind of good stuff has not changed. You can't time the market. And I'll say this again, I do believe that these entries are great nonetheless, but as far as for internal pressure and stuff like that, or the capital that you're allocating, do not feel like this is going to be the end all be all of a great entry for prices. And specifically, I want you guys to remember the pretty much the tickering with Bitcoin and stuff like that. And Dogecoin has done this at several points as well, where we'll kind of have like this kind of like tennis ball action going back and forth at certain price points until we got like the next breakdown. And this happened with Bitcoin, like around like the $40,000 range, and it happened a lot last year with Dogecoin at around the 25-cent range. And you can have these run-ups and stuff like that, but that's not an indicator of a reversal or that this thing is getting ready to take off. So don't feel that pressure or feel bad that, oh my God, I'm about to miss this and stuff like that, because you're going to see like a lot of content getting pushed out saying that, okay, getting ready to take off and green videos and bull run and stuff like that. They're just creating content. There are several reasons that shorts can exit a position outside of being, whether that's margin called or they're coming out of a position because the things have changed as far as for the amount of liquidity that they have, and they need to do some risk allocation. You can have a situation where you want to swap, or you believe that the negative pressure of the overall market can kind of sustain a coin within a certain range. So you'll close out some older positions and come in at a lower position if the market can kind of naturally create that negative news for you. And of course, you can also just simply take profits depending on where you started shorting at. If you were able to get the price action that you want, you can kind of come back in and buy that asset again, or buy that asset initially at that lower price and collect your spread. The simplest thing that you can remember is that when there is huge price action, definitely check the shorts to see, because typically they're going to be on opposite ends of the spectrum. Green candles on a short chart mean that they're creating the synthetic sell orders, and that's going to create obviously downward pressure on the price of the coin. Big red candles on the short chart are going to pretty much be them buying the asset that they promised they would, because that's what a short is. And this is going to usually trigger a green candle on the actual price chart. So when we see these green days and stuff like that, when shorts are coming down, this is just pretty much these coins moving closer to their actual price if those synthetic sell orders were not injected into the market. This isn't an indicator necessarily for reversal. We haven't hit that range yet, but this could be an opportunity for them to raise additional capital by, again, pushing those people over the edge before they come back in. Because even though we're down roughly around 16-17% in shorts, they haven't covered the positions that they've taken out alone within the last couple of weeks. So they're still relatively high. That's why you see that sharp spike in that yellow line. That's the 21-day moving average. We'll monitor this ongoing along with the macros as well. But remember, this is not uncommon for coins like Dogecoin, Bitcoin. This is actually a very common process. Nothing goes straight down and nothing goes straight up. That's what a point of resistance is. Whether that's going up or going down, you hit a wall and you bounce between it until price and demand, or at least a form of it, decides the next direction. Keep your eyes on the macros right now, because that's going to tell you a lot of information about the direction of this chart, and certainly give you an idea about prices. And if you want some free money, I have a link to Moomoo in the description. You can get up to 10 free stocks just by opening an account and depositing any amount. You can get up to $2,500. And the best thing is they don't participate in things like payment for order flow, so you don't necessarily have to worry about front running or stuff like that from hedge funds. If you like the video, share the video, subscribe to the channel if you want to hear more from me. I appreciate all of you. Thank you, and until next time.